social and corporate governance reporting platform, ESG. We're proud to be supporters of the RIU conference, and I'd firstly like to start by congratulating Social Suite customers that are here presenting throughout the duration of the conference. Black Canyon, Coda Minerals, Galileo Lithium, Galileo Mining, Helix Resources, International Graphite and Nordic Nickel. These companies, along with 80 ASX micro to small caps, understand the importance of ESG to create long-term organisational value. The Social Suite platform is specifically designed for micro to small caps in supporting them, one, to attract capital from investors that value ESG disclosures. Two, creating revenue through responding to supply chain requests and the negotiation of offtake agreements. Three, mitigating organisational risks while building brand value. The Social Suite platform is easy and affordable for the smallest of organisations to get started with ESG. This is complemented by our industry expert ESG coaches who will help you with your ESG journey. We wish all companies and investors a successful RIU conference, and we're here to help with your ESG needs.
Welcome back after morning tea. We're running pretty much on time, which is always a good thing. The topic of our next presentation is managing and valuing exploration through absolute prospectivity. Niall Tomlinson is Principal Exploration Geologist for SRK. He has over 15 years experience in mineral exploration, from establishing remote field camps to valuation of exploration properties and CP technical reporting. Niall leads the commercialization of M-VAP service that harnesses modern data science to value and strategically manage exploration assets. M-VAP, or M-VAP, replaces traditional relative prospectivity within an absolute prospectivity that estimates the probabilities of making a discovery of deposits of different magnitude within the area of interest. And here to tell us more of this new offering from SRK is Niall Tomlinson. Please make him welcome.
Hi, first of all, I'd like to thank the organisers of this event. It's a great conference and thanks for the opportunity to speak. My name's Niall Tomlinson. I'm exploration geologist with SRK Exploration based out of the UK. I developed this talk and M-VAP with my colleague SHN, who's not here unfortunately, but I'd like to credit him. And I'm going to talk to you about M-VAP, which was developed using Eastern Goldfields as a study. So you may recognize some of the data. Okay. So before I get stuck into exactly what M-VAP is, I just want to introduce some of the questions we face in exploration, some of the challenges we have. And then I'll address them as we go through the presentation. So what are the things we need to do? Sometimes we need to value ground. We tend to do that on sort of dollar to hectare comparisons with other properties or how much has been spent. We have to make decisions on should we keep exploring a ground or should we, or when do we stop? That's generally done on qualitative analysis, but in the worst case, it's done on absolutely no analysis. And another question we sometimes have is, are we performing? Are we going to meet our exploration goals? Are we going to make that discovery that we've set ourselves in the next 10 years? And generally, we try and measure our performance against sort of traditional KPIs, sort of meters drilled and things like that, which don't necessarily capture what we're actually trying to do. So just had some of those questions at the bottom of this slide. Is this really a good way of conducting exploration? Is the value of a property really tied to how much we spent? Probably not. It's probably more related to how prospective the ground is. And should we really measure our performance about just how many meters have we drilled? No, I think there's better ways of doing these things, which is the motivation for M-VAP. Okay. Another thing we need to consider is in exploration is the value of uncertainty. This chart is real world data. It's the probabilities of what you might discover on a random 1 by 1 kilometer ground in the Eastern Goldfields. And you can see you're probably going to find nothing. So where the real value in exploration is in that long tail, the long tail, particularly to the right, where you're probably sort of making a large discovery, which are unfortunately very small. But if we're going to think about how much exploration is worth, we really need to try and characterize that long tail. Okay, so what is M-VAP then? So M-VAP is a methodology we developed. It harnesses Bayesian statistics and machine learning to help us manage exploration projects. Note, this is perhaps a bit different to other machine learning exploration things you may be more familiar with, which are targeting focused. Although M-VAP has some applications in targeting, it's really more about management and valuation. M-VAP works by combining expert knowledge, principally in the form of mineral systems, with our knowledge of where deposits exist and how many deposits may be left to be found. That's done algorithmically. The main applications of it are valuing property, making exploration decisions, performing how well we're doing. I'd just like to credit as well how we developed M-VAP. It was 2 years in the making. It's been funded by various SRK offices in part of the SRK Global Group. It was a collaboration with the University of Exeter in the UK, and it was 50% funded by the UK government. Okay, so how does it work? I'll just leave that on the slide there for a while for you, because I'm sure you'll understand that. Yeah, only joking. Of course, I'm a geologist, so I can't do maths, so I'll explain to you in an easier way. So, M-VAP basically uses the concept of a Bayesian search strategy, which you may or may not be familiar with, but the good news is that this is actually how humans naturally think. So, if we lose our keys in our house, what do? We form a prior expectation map, which is basically, well, where did I last have the keys? Which rooms have I been in? And then we go about searching in the house, trying to find it. And as we go through, we search a room, not there. So we adjust our probabilities of where the keys might be accordingly. And we keep going through the rooms. And each time we search a room, we adjust our probabilities. One thing is important, though, is we never assume that we have 100% searching efficiency. And I'm sure you've all experienced the phenomenon of keeping going back to the same room. I'm sure the keys are here, and you don't find it, and eventually you do find it in that first room normally. So this is basically what we're trying to do in exploration. So the analog of a map of where the keys are is our mineral systems model. Analog of when we're searching the rooms is the exploration we conduct. So this is the basic concept of what M-VAP is. So how does it work? I've already explained a bit of this. It's a Bayesian framework. The prior is the mineral systems model. The evidence is our exploration data and where we found deposits. And we output a posterior prospectivity, which is absolute prospectivity, which is the actual probabilities that you may make a discovery within the area of interest. And then that probability model that can be then used in a decision tree or Monte Carlo or real options type of framework to value or manage your exploration. So here's the M-VAP workflow. Up here we have the mineral systems model. we're agnostic on what model you use, as long as a model that's been developed, and then your mineral systems model generally has a scored prospectivity map, which we convert into a mathematical model using machine learning. And then we have the evidential inputs, which are where have the deposits already been found, and also endowment analysis, how much is left to be discovered. And we basically put it in the Bayesian formula and output our posterior probabilities. So here's an example of the prior input. This is the Y4 mineral systems model for gold in eastern goldfields. We converted that into maths using this function. It's maths. I'm a geologist, so I'm not going to get into that. Here's an animation of the actual real world conversion of that mineral systems model into a mathematical model. You can see the convergence here, and this is the eventual difference between the two models is here. Okay. So then it's we move on to the other side of the formula. Where have we found deposits? And also another key input here is where have we looked? We model exploration as a function of actual exploring for the things. So we have an iterative model. We work out how many times an area has been looked at. So you need some proxies for exploration maturity. Best case, that would be drilling data, but you can also use, annual reporting, anything which is a proxy for how mature an exploration the area is. And by doing this, we can, this will help us work out which areas are the most mature, have little prospects of new discoveries, so we don't keep wasting our money in the same old areas. We also accommodate the fact that our exploration is not 100% accurate, and that the accuracy actually varies depending on the size of the deposit. Larger deposits are generally easy to find because they have a larger surface expression, whereas the smaller ones are easier to miss. So we have a different amount of accuracy depending on how large the deposit is, and everything we do in M-VAP is stratified by deposit size. So we can work out what your probabilities are making of discovery of different sizes. The other important part of the evidence when you're considering this is temporal endowment modeling. So we don't just use an endowment model, which might tell you how many deposits are in the entire terrain. We try and bring that into the time frame of what your exploration may be. Because the reality is, there may be a lot of deposits in the terrain, you've only got a 5-10 year window for exploring. So we model how much deposits are found in each era. We can recursively model that back, and so we can say in the next 10 years, this is the probability that different deposits of different magnitudes will be found. So this is some real world data from the Eastern Goldfields showing what's been discovered in the every 5 years. And you can see a gradually declining discovery rate. And also we generally find smaller and smaller deposits as we go through the life cycle of a terrain. Okay, so this will be the final output of the M-VAP process is a posterior prospectivity map. So this map is divided up into 1 by 1 kilometer cells. Each cell, this map here is showing the probability of making a discovery of any size in each of those cells. There's actually more information in each cell. So each cell will have a probability distribution like this. So you can say, well, in this cell, this 1 by 1 cell, there's this probability of making no discovery, and through to the larger discoveries, unfortunately, it drops off pretty rapidly. That's the way of exploration. So if you have an area of interest, maybe it's your mineral license or your portfolio, you can agglomerate all those probabilities to end up with a probability of making discovery in your entire area of interest. And this just shows where we started and where we ended up. So this is the prior prior model, just based purely on the mineral systems work, and the posterior model here on the right-hand side. So you can see the probabilities have been greatly reduced, and that's a reflection of the maturity of the exploration in the Eastern Goldfields. Okay, so use cases. As I said, M-VAP was not specifically designed for targeting, although it can be applied to that, but really the main uses are for managing your exploration, trying to make those decisions of when you should stop exploring, or whether you should start and where you should allocate your capital. One of the things we've always had in mind with M-VAP is we think that maybe 1 in 1,000 prospects
quite good numbers there, better in palladium richness, also around the 0.3 nickel and copper. Strong geological continuity, as you can see, between these zones, both in the context of the mineralisation and the geological setting as well has good apparent continuity. And so we're continuing to drill, particularly out to the eastern side, out through here, to unlock the continuity of that zone. And as we're going deeper, besides the disseminated zones, we seem to be starting to get some more high-grade seams, starting to get indications of even better PGE grades associated with those. The other aspect as well, as we continue with this drilling and some aspects of our wider exploration, come up with some things that are a bit different again, which increasingly encourage our work. In this case, better than 2 metres of massive and semi-massive sulfides, running 1.9 copper, not bad, 0.5% nickel, associated cobalt and palladium. This is the first occurrence that we have of significant cobalt associated with sulfide. Callisto itself doesn't have this, and it certainly doesn't have massive sulfide. So this is, this looks to be something different. So that's really encouraging. There are other things around here to be chasing, as well as Callisto. And it's probably puts it more in line with something like an intrusion-related magmatic sulfide deposit. The most local example of that would be Nova. So in the wider magnetics image sitting behind all of this, so our target generation doesn't quite come into view here. But this magnetic trend heading up this way extends for about 5 kilometres, represents part of the intrusion complex that Callisto is hosted in. So that's encouraging for us. But as we've started to explore a little further away from Callisto, we've been continuously supported in that belief, in that 400 metres away, over in this area, we've identified disseminated nickel sulfides in 4 holes. And again, seems he's in a different setting to the Callisto deposit itself. It's part of the seal complex, but it looks to be different again. And again, 250 metres up here, we have another zone of palladium nickel mineralisation. Again, looks to be some similarities to Callisto, but really in a different setting location. So yeah, really getting encouraged by this for the upside and the scale with the 5 kilometres of that intrusion complex. So on we go. The thing that also excites us is that Callisto itself has quite low sulfide content, less than 5%, usually 2-3% is some of the better mineralisation. And that has some comparison to things like Platte Reef in South Africa. So it also has disseminated mineralisation, usually around the 1%. Massive sulfide's very rare. And so that, there's that commonality there, but also the rock types. So the sill that hosts, or the complex that hosts Callisto is a Harzbergite, which is just an ultramorphic rock with some olivine in it, grading down into peroxenite at depth. And as that transition occurs, we start to get more and more sulfide accumulation, and the mineralisation really picks up. So that in common as well. But the thing that really excites us in the Norseman project, the Callisto prospect as well, is that Platte Reef styles can be quite large, as you can see there. So that really, if we can start to see signs of that, then we will be really happy. So yeah, the contained metals, palladium, platinum, gold, rhodium and copper with some nickel as well. Our wider prospectivity on the Norseman project, the Jimbalana prospect. So this a Proterozoic dike running east-west through here, the Jimbalana dike. A number of anomalous intercepts associated with EM or close to EM conductors. JD1 off to the north of there, a 1 metre at 0.24 nickel, 0.35 copper, associated cobalt and palladium at the bottom of an air core hole that refused in massive sulfide material. That needs to be followed up with RC drilling or diamond drilling. Similarly to the south side of the Jimbalana dike, JD2, some quite wide zones, 12 metres, 0.13 nickel, 0.11 copper, again, associated cobalt palladium, similar signature in another intercept at the deeper part of that hole. It really encourages us there. The Mission Sill prospect, perhaps even more so, although at probably an earlier stage, has a strike length around 10 kilometres. We hold the majority of that in our ground. And it has multiple anomalous air core intercepts through its length, our best being 8 metres at 1.442E platinum palladium. So yeah, really quite exciting there at the MS3, that particular intercept is at. And those areas, they've really only had shallow prospecting or some air core work, but the whole length of that is anomalous. So we really need to follow that up with RC and diamond work, given the understanding that particularly that Callisto is blind to surface. So there's drilling over the top, air core drilling, and it comes within about 40, 60 metres of the top of the thing. Okay, the next steps on the Norseman project. Continue the diamond core drilling at Callisto, targeting those eastern extents. Following up the RC, drilling of the new sulphide variants we're seeing. So the palladium nickel sulphide, 250 metres to the north, and the disseminated zone, 400 metres further. Infill drilling of the discovery. And we're conducting some early stage met work at the moment, which over the coming months will start to release some results that'll start to describe how that might fit into the scenario. We've got ongoing assaying of our results, so multiple drill holes and assays pending, and we'll get our permitting in place for that testing on Jimbalana and the Mission Sill. Fraser Range project. So some similarities here between the Thompson Belt in Canada, nickel belt, and the Fraser Range. The Thompson Belt, about 100 kilometres long, 146 million tonnes of known resources, and over 50 years of history, discovery. And in the Fraser Range, some differences there, which I'll go into in the next slide, but really there's 2 deposits known to date in that 150 k's of strike length. One is an operating deposit, 18 million tonnes of resources there. And it's really, that places it as an immature belt that has a lot of untapped potential. So in the Fraser Range, that difference is really that we have a lot of barren cover over the top, much younger material. So for our general procedure there is a lot of geophysical work with magnetic and gravity interpretation to identify the location of what may be prospective intrusions. And then regional EM surveying to identify conductive zones for potential massive sulphide beneath that cover. To date, we've identified 2 intrusions mineralised with sulphides, Lantern South, a mafic ultramafic intrusion, reasonable mineralisation over some quite good widths, 23 metres, 0.19 nickel, 0.14 copper, 41 metres, 0.19 nickel, 0.14 copper. So, quite interesting there. And Delta Blues, a little bit different again, but associated with felsic and mafic intrusions, and more of a copper gold flavour there. But it really does increase our confidence in the regional prospectivity there. So we've also acquired a strategic tenement that locks away another 6 kilometres of strike. This one in here, down to the south from the Lantern South prospect, known mineralised intrusions, and our couple of prospects here, the Lantern East prospect and the Easterly prospect and the Green Moon prospect, which currently have untested EM conductors, which we need to get into a campaign drilling at a nearer term. And we have our EM ongoing on that new ground on the extension of those intrusions. So we'll no doubt develop more conductors to put into that campaign program. To cap it all off, we're a well-funded and supported junior, early discovery valuation, highly prospective. We're very active and we're focused on those high demand metals for the electric future. Thank you.
David Crook. Oh, sorry.
Sorry to take 1 minute of your time before we get David Crook up here. But while I've got a reasonably full audience, I just want to let everybody know that the man on my right, Mr. Jerry Gannon, today is his last day at RIU Explorers Conference in his career. So please a round of applause for Jerry. 15 years. And as part of the John Farnham farewell tour, he's going to do a trip over East Pit later in the year and do the odd one or two. But this is the last time you'll see him on the stage. He'll probably be in the audience next year. So thanks again, Jerry, from us and RIU. Thank you very much.
Thank you, Stuart.
Thanks, David.
Thank you. Thank you very much. That was unexpected. Thank you, Stuart. Much appreciated. David Crook has worked in the mining and exploration industry for over 40 years, including battery and new age metals for much of the past decade. This has included discovery and evaluation of spodumene deposits in WA and Canada, and the discovery and excavation of Australia's only cesium mine. Please welcome David Crook.
Thanks very much. And it's been very good to enjoy these conferences with Jerry over the last 15 years or so. And at odd times, he's even been a shareholder, I believe. So he has got discerning taste now and then. Charger listed about 18 months ago. The area that we have focused on, we came out of Lithium Australia. So these were tenements that had been selected quite carefully. Lithium Australia were one of the early movers in the exploration space. They were moving into downstream technologies. We were able to acquire the projects, and that means that we had quite a well sorted group of tenements into the company. So we then applied a systematic approach to exploring those tenements, and we're reaping the benefits of that now. So we have over the 7 or 8 or 10 years that we've been exploring for pegmatites, we've put into place a fairly systematic, it's not difficult, process for finding these things. Lake Johnson is one of the areas that we did. We've done geochemistry there. We're drilling out there now, and we're starting to see some stuff come through. You would have maybe seen in our announcements. The Iwanow project is probably where our greatest leverage is. That's a tenement that has pegmatites in it. It's been explored for tantalum, so there was quite a nice database to start with. We've laid over the lithium style exploration, but the thing is that's entirely enclosed within Core Lithium's project. So we're only 8 k's away from their processing plant, and we're along strike, and I'll show you some pictures about that. We're still well funded. We've got $7 million in the bank. We're drilling as we speak, and we're hoping for the best. So we putting that into a little bit more of a wordy slide. We've got 2 prospective lithium projects, Lake Johnson and Iwanow. At the end of the day, there are only 14 JORC compliant resources in Australia for lithium. So I guess our aspiration is to be the 15th. We're in a very good jurisdiction. Everybody knows that. We continue to hear horror stories coming out of Africa. One of our lithium colleagues is going through the ringer and over there at the moment. So an excellent place to be doing business. And I like to think that we've got a very good and capable team around us. We've heard about me. Terry Gardner is an investor and stockbroker. Adrian Griffin, he stepped away from Lithium Australia and has joined us on the board. He's run mines, he's run exploration companies. He's quite the entrepreneur. I'm sure you've all met him, and if you haven't, he's around our booth. Brian Dixon has been on companies, and he's made companies, and he's worked with them. So this is the kind of strength that we've got on our board. A very good exploration manager, and Jonathan Smalley, he's a long-term Goldfields fellow. We only have 62 million shares on issue. That's going to go up a little bit because we've just bought Lithium Australia out. When we listed the company, we bought 70% of the tenements. We're now going to 100%. And we have quite a strong share register. There's companies like Lind and Gunsynd on the top. And of course, Lithium Australia's got a fair swag, and Adrian himself personally has a big swag. So 65% is held in what we call safe hands. Let's start at Lake Johnson. And very good company, the Buldania and the trend up through here and these other ones here. Earl Grey is, of course, a very big one. So we've just gone to 100%. We're pretty close. We're about 100 k's away from the Esperance to Kalgoorlie infrastructure corridor. We already knew that there was a spodumene, well, I should say the Lithium Australia geologists had discovered spodumene out there, and we knew that the Mount Day area was very highly prospective, and so we're getting into that. And of course, the fact that we're reasonably close to Covalent's Earl Grey deposit means that it's a very attractive area to be exploring. And breaking the project down, we're drilling here at the moment. We've just acquired this tenement 100%. We now own 100% of them all, and the Mount Day lithium field is up there. That's reiterating that. These are photographs of spodumene, and for those very few of you that have never seen spodumene, we've got a very nice chunk of rock at our booth, just in one of the doors there. The situation here, drill, soil geochemistry required here. We've done soil geochemistry and mapping up here. It needs a lot more detail, but we are starting to see spodumene indicators in the soil sampling. These things, lithium minerals tend to form on trends, and you can pick the lepidolite, the mica trends from the spodumene trends, and we are seeing that up there. It's just a matter of continuing to do the work. We, as part of the original mapping and soil sampling, we're getting 2s and 3s and 4% in rock chips. We're drilling these holes at the moment. We're up to about here. It looks like it's dipping back towards the bottom of the page. It looks like it's plunging towards the north, and we'll just drill until we run out of places to drill. And then it's been really interesting coming to conferences like this. You speak to people, you get new ideas, and there are some geophysical techniques that look like they're working, and this will be the perfect place to trial some of these, particularly as we chase it deeper and undercover, because you can see the red areas are where these things outcrop, but we're still getting spodumene all through here, and it doesn't outcrop there, so we need a bit of help. The Mount Day area, our first pass geochemistry, howls with lithium, also some very nice tantalum numbers in these. So it's clearly a LCT pegmatite system. It's about 15 k's long, so it's an order of magnitude bigger than some of the other ones around here. Flat-lying things which make exploration a little bit more difficult. Lithium minerals up at the Witten area, so it's a fully fertile LCT system. Very tight bush, very hard to get around, but we just got to work our way through it. Moving up north, it took us a year to get our AAPA granted. That's our heritage approval to go drilling out there, and also the MMP, that was a little bit shorter, but we have both of these things in place. By the time they were in place, of course, it was the wet season, and November and December were one of the wettest periods up there, as we all know if we watch the news. The last 2 months, though, have been quite dry. So we're ready to roll the dice and get up into this area and start drilling over the next few weeks. The grey area all around us is core. Their plant is up about here. Ahoy, they're drilling out their resources here. That's 8 kilometres, so it's hardly a long way away from the core area. So we're just outside of Darwin. The area is very well mineralised for spodumene. The tricky thing there from a geological point of view is that the near surface spodumene is all weathered away. So the best you can come up with is pegmatites sticking out of the ground, and then geochemistry around them. The other thing that gives us a little bit of hope is that we did fly aeromagnetics over there, and you can see the trends this way. So it's all on exactly the same trend as the core lithium mineralisation. Ahoy, just off the or just up there, nice thick intersections, nice grades, so very prospective, and similarly the Bilitis down here. We've got let's have a look at the individual prospects. This is the geochemistry that we've done. It's a combination of Haddington geochemistry that goes back a wee ways and stuff that we've done ourselves. The 7-up trend, which trends straight through to Ahoy, howling anomaly, over 1 kilometre long. We've cleared our lines into there in preparation for drilling. These ones here, I've got to love Mega Bucks, whoever named that. Hopefully they're prophetic, and Old Bucks beside it. That's some of the people that work for this company, I suppose. So we're ready to drill those. It's just a matter of rolling the dice. As I said, we would normally wait until it's dry. Well, it seems to be dry, so let's get up there and get drilling. Megabucks was trenched by Haddington. So we know that it's 400, 500, 600 metres long. The overall anomaly is about 1 kilometre long. Pretty readily drillable. I should add that there's a tar seal road through here, so it's very good infrastructure from that point of view as well. Old bucks, much smaller workings evident in the surface, but these are lines of pits. But the geochemistry is, again, another order of magnitude stronger. So we're very hopeful for this one here. And 7 Up, the guys reckon they found some spodumene down here, but it's a very, very strong lithium in soil. So it's a very simple story. We've got our preparatory work done. It's just time to drill these things. Lithium remains in huge demand. There are alternatives coming up, but at the end of the day, lithium is still going to be the basis of the batteries going forward for the next decade or so. Charger offers 2 highly prospective spodumene targets at Lake Johnson, where we're drilling at the moment, and Iwanow, where we hope to be drilling in the next couple of weeks. Most of Australia's lithium resources are controlled by multi-billion-dollar companies, as we've seen. Core Lithium entirely surrounds us, so that's the kind of leverage position we see ourselves in. And we like to think that we're well credentialed. I like to think very professional people and doing the best for the shareholders. So thank you very much.
Thank you very much, David. Gabrielle Iwanow is the Managing Director and Chief Executive Officer of ASX-listed nickel producer Mincor Resources. Before joining Mincor, Gabrielle worked for Auroch Minerals, where she grew Prominent Hill copper gold mine into one of the largest hard rock underground operations in Australia. In 2020, Gabrielle was recognised with the Telstra Business Women's Award for medium and large businesses in South Australia, and included as one of the top 100 global inspirational women in mining. She was awarded an Australian Government Office of Women Board Diversity Scholarship in 2015. She's a fellow of AUSIM, an associate of the Australian Psychological Society, and has qualifications in commerce, arts, and business. She sits on the AUSIM Council for Diversity and Inclusion and the board of the National Trust of South Australia. She previously held the position of Vice President for the South Australian Chamber of Mines and Energy, and she's fluent in Spanish and English, having lived and studied in Argentina. She's an avid supporter of the arts and charity, and today she will probably speak to you in English. Please make her welcome.
Goodness, what an introduction. Wishing you all my best as well for the plans ahead. That's very exciting. So good afternoon, everyone, and it's great to be here. I would like to just take a few moments to recognise the Whadjuk people as the traditional owners of the land upon which we stand, and pay my respects to elders past, present and emerging. It really is a pleasure to be here and to see that all that is on offer. As a relative newcomer to this conference, it's incredible to see the breadth and the resources showcased over the last few days. I won't need to introduce myself after that welcome. Today I wanted to come and update you, to share an update about where we're currently at with our production ramp up and the work ahead. I'd like to touch briefly on who we are firstly. Mincor has a long and rich history within the Kambalda district of Western Australia. We're about 45 minutes from Kalgoorlie, and we've operated in the area for the last 2 decades. We're an ASX 300 listed company with a market cap around 820 million. And over the course of the last 2 years, we've been ramping up production from our 2 high-quality nickel sulfide underground operations, northern operations and southern operations. It's an exciting time to work for a nickel company as part of the world's transition to a lower carbon future. At Mincor, we're excited to have both global vision and local action. Locally, through the quality of the relationships we maintain and the contribution we can make to the region, from direct employment, using local suppliers and providing training and development opportunities, through to royalties and taxes and community contribution. And globally, through the role we play in supplying critical minerals for electric vehicle batteries as demand continues to increase. We want to play an active part in the formation of Australia's critical minerals strategy and see that there is tremendous scope for this country to play a key role on an international scale. I wanted to briefly touch on this slide to provide some context of where the nickel units we produce go into the domestic WA nickel market. Our product feeds the BHP Nickel West system, which, as you can see, is also taking feedstock from its own and others' mines. Our long-term offtake agreement is in place until December 2025, and we maintain a very good working relationship with BHP. This year marks our first year of guidance released to the market. We're producing 8,000 to 10,000 tonnes of nickel in concentrate. Our plan is back-end weighted, and we delivered just under 2,000 nickel tonnes by the end of December last year. Our plan is mainly a function of bringing new areas and new mines online. So for the first half, we've predominantly been development focused. And as we move more into stoping, we will now start to see tonnes coming through. We're a company focused on growth. And in October last year, we announced an increase in our Northern Operations Reserve and our overall ore reserves, which extended the life of our operations. We are focused on both extensional drilling as well as exploration within the significant land holdings we have in the district. I started in role in mid-November last year, and since then I've been focused on three key priorities. Firstly, the delivery of our production guidance for this year, and importantly, looking ahead to set ourselves up for the year ahead. Secondly, looking at our own exploration pipeline. And thirdly, options for inorganic growth. Since commencing, I've been reviewing mine and geology plans to understand how we can further de-risk our plans. Pleasingly, late last year, we re-signed our agreement with underground mining partner Pit N Portal. This was an important step to refocus on the delivery of safe nickel tonnes rather than commercial distractions. On an execution front, I've been working with the teams to understand the mining rates, labour availability, and options for how we can maximise throughput. We have also been going back and understanding more fully the assumptions for the mine design and optimisation, looking at the number of required work areas, the declines profile size, and the equipment. On the geological front, we've been increasing our grade control programs and resourcing, continuing to build our on-site teams, especially as we learn more about the Cassini ore body. Importantly, late last year, we decided to accelerate some of our growth options and raised some capital to support these activities, as I said, late last year. These drilling activities were originally scheduled for later in the calendar year this year. And as we've been able to secure a third rig, we've decided to take the opportunity to bring forward these activities as part of our commitment to growth. Now, to talk more fully about the operations. At Northern Operations, which is effectively joining the Durkin and Long mines together, we've recently reached a significant milestone where we have now broken through the incline and decline of the two mines. This is important because it means that we're now able to bring material more quickly to surface, reducing our trucking cycle time by 20 minutes. We're also soon to commence development in the Golden Mile to bring on additional areas for production later this financial year. Lastly, we have also commenced the rollout of improved data capture and visual systems to improve decision-making and performance conversations. This I'm really excited about. Having seen before how data can be used to drive productivity improvements, I'm really pleased to see this work progressing with our underground mining partners, Pit N Portal, very much on board. I did want to touch briefly on exploration at Northern Operations. Recent drilling results are suggesting that there is further strike potential in a broadened mineralised channel than first thought. We now believe that there is up to 2.5 kilometres in strike potential, and our continued drilling program will be targeting this area. This is a low-cost growth option as it sits firmly within the existing mining envelope, close to infrastructure, and therefore presents a nice opportunity should it prove up. At our southern operations, we successfully commenced stoping in November from the Cassini mine. This is a significant milestone as we move deeper down into the ore body. We now have drives off both the northern and southern sides of the ore body and are in a process of optimising our stope cycle time, how quickly we can turn over our stopes to improve our throughput. It's early days and the team remains focused on its productivity drivers as it shifts its mindset from a developing to producing mine. I mentioned before some of our work around de-risking our plans, and the Southern Operations Village is a great example where we've reduced the travel time for our people to and from work, better for their health and well-being and better for the business. Similarly, flights directly into Kambalda are another example. In January this year, we also commenced a significant exploration program at Cassini, which is the first time we've been doing further drilling at this operations. Again, this work was to accelerate the growth program we raised capital for last year. Our rig is set up in an area within the Cassini main body, and we're drilling across into an area called Cassini North, as you can see on the slide. We currently believe that this has the potential of a parallel channel with mineralisation seen in the upper region, and this drilling allows us to push across from the main body instead of going from surface. We're excited to see what comes of this exploration program and look forward to sharing results in the future. More broadly on growth, we're focused on refreshing our exploration strategy. We're going back and looking at the parameters we've used to target areas for greenfield exploration historically, and then led by our very capable and deeply technical internal capability, we're pairing up with some of the very best capability externally to challenge our thinking and look at things differently. Again, we're committed to share more about our exploration strategy as we continue to position ourselves for growth. And I can see our exploration GM sitting in the audience or on seat if you wanted to connect with him at the Mincor stand. So it's an exciting time. It's a chance to change, it's a chance to build, all within the Mincor way. And I'm seeking to leverage off all of the good things that have gotten us to where we are today and remain open for what's to come. Thank you.
Thank you very much, Gabrielle. Before our next presentation, an additional item as we welcome to the stage Peter Hilgendorf from Max Geo to say a few words. Peter.
Welcome everybody. Sorry, it's a very slight interlude. So Max Geo, we've been hosting a coffee, and I have to say I think the young ladies and gentlemen working there have done an incredible job. Over 2,000 cups in 3 days. So if anyone wants a barista, I'd say I'd hire them. Thank you. One of the things we had was a guessing competition of how many rocks and coffee beans were in that jar. And we had several hundred entries, and I have the pleasure in saying one person actually picked the right number, and his name, excuse the glasses, the joys of getting old, is Gordon Webb from Yarraman Metals, if he happens to be in here. Okay, so it was actually total, and we had 87 rocks and 50 coffee beans. So 137 was the actual number. You there? Ah, yes, the prize, of course, is always a prize. A nice bottle of Republic gin, full-body gin from 2 blocks away. If anyone likes gin, that's the best place in Australia to buy it. So give you that. Thank you. And I'll give you a next year coffee cup as well. Okay, thank you. All right, thank you.
Ramelius Resources Exploration General Manager is Peter Ruzicka. Ramelius is committed to growth, both organically through exploration as well as through corporate acquisition. Along with 6 operating mine sites throughout WA, Ramelius controls prospective regional exploration tenure and is supported by a well-funded exploration budget. The exploration team have a successful track record of discovery and resource addition, particularly within the Mount Magnet region. And the challenge for the team now is to maintain this momentum. Ramelius's most recent acquisition is the Ruzicka Gold Project, acquired in early 2022 and progressing towards a pre-feasibility study in June 23. Please welcome Peter Ruzicka.
Thank you and good afternoon. I'll be presenting a geology-focused exploration update this afternoon. Disclaimer and qualification statements. Quick summary of Ramelius. The company operates 2 production centres or processing hubs, one at Mount Magnet and the second at Edna May. These are fed from a number of local and satellite open cut and underground operations, as you can see on the figure there. Company holds a mineral resource inventory of 6.2 million ounces, mineral reserve of 1.1 million ounces, and produces between 240 and 290,000 ounces per annum. The exploration focus is on sustaining our existing hubs, advancing the new Ruzicka project, and identifying new opportunities. Ramelius has a history of growth through both acquisition and exploration. I'll start where I finished off last year, Mount Magnet. The aerial photo on the right shows the extent of historic mining at Mount Magnet. Current operations shown in gold colouring there. Mount Magnet has a long history of production. It still remains the cornerstone of Ramelius' growth. Project is well positioned for sustained growth, sustained production with a mineral resource of 3.2 million ounces, reserve of 600,000 ounces, and multiple exploration targets, some of which I'll describe in this presentation. One of the key points about Mount Magnet is that historic mining depletion has largely exhausted the near-surface environment, and future targets are increasingly at depth. And exploration needs to evolve to meet that challenge. We recognise that. Last year, we undertook a series of 2D seismic traverses through the Bugatti Dome to improve our understanding of the deeper structural and stratigraphic framework. More recently, we've taken that to another level. We've combined detailed individual project studies with that deeper framework to produce a 3D geological model to assist with our future targeting. And there are 3 broad target areas there. These haven't changed a lot, but we've refined some of our ideas. The traditional northern BIF closure, fault closure area, where Galaxy and Hill 50 sit. The southern BIF fault closure domain, which hosts Morning Star, and the Bugatti Dome, the central area there, where our 2 most recent discoveries have come from, those being Eridanus and Bartus East. Hill 50, Hill 50 mine was exploited to a depth of more than 1.5 kilometres. produced greater than 2 million ounces of gold, a big system. High-grade BIF shoots continue at depth, and the only reason this mine stopped producing back in the day was that it was a low gold price environment at the time. We currently have a deeps mineral resource of 360,000 ounces and an exploration target beneath that. There's no sign that the system stops at depth. The adjacent Galaxy underground mineral resource comprises 510,000 ounces, currently in development, as you can see on the right there. Recent drilling also shows that that system extends at depth, the same BIF-hosted shoots. The Hesperus area, so this geology plan shows the Galaxy Hill 50 Hesperus area. Pit outlines in brown, the BIF stratigraphy, various shades of blue. Hesperus granodiorite sits to the south of the Galaxy system. In detail, mineralisation at Galaxy Hill 50, hosted by or controlled by the interaction of a series of northeast trending structures called the Bugatti breaks with the prospective BIF stratigraphy. And what we're now seeing is that detailed structural logging of the granodiorite at Hesperus shows those same structures within the granodiorite. And if those structures are interacting with the underlying BIF, then we've got all the right ingredients for another high-grade system. The cross-section on the right highlights that potential. Intercept last year, 11 metres at 55, below the granodiorite that we were actually targeting. So we've reconsidered our models for this area. Granodiorite hosted stockwork mineralisation is a relatively new style within the Bugatti Dome. The Eridanus deposit on the right has been well documented. Essentially a 1 million ounce discovery in what was considered a mature area. Bartus East on the left is a more recent discovery. We released a maiden resource last year of 4.2 million tonnes at 1.7 grams per tonne, 230,000 ounces, including a high-grade zone shown in gold on the long section, which is still open at depth. And in the middle of that gold zone on the long section, you'll see an intercept 45 metres at 10.4, just begging for more drilling. One of the interesting points about Bartus East, as you can see from the long section, is that the system, with one exception, doesn't daylight. So you can see the shape of the granodiorite there. So the sole exception is an hypothesis at the northeast end of the system, which is exposed in a shallow oxide pit. The high-grade zone has no surface exposure. And it begs the question, what other granodiorite systems do we have in this area at depth? And to help answer that question, we've recently completed a 3D passive seismic survey over the Bartus Trend using ANT, or ambient noise tomography. Results of that survey shown here in plan and cross-section. The high reflectance signatures, the coloured zones, seem to reflect our known granodiorite intrusives quite well. And we chose this technique because we saw that relationship from earlier 2D seismic surveys. What's interesting now is that in plan view, there are a series of new intrusives in the southern area. And from the cross-section, you see that we've also got quite a few new targets at depth. So we've generated quite a few targets out of this survey. One of those, as you can see, has some historic near surface anomalism, 4 meters at 9.4 on the cross section. Another seems to indicate a broader intrusive system below Bartus East. And again, that bodes well for deeper drilling at Bartus. And another target on this cross section beneath the shallow oxide pit called Black Hole there on the left. Sovereign targets sit in the prospective eastern BIF fold closure domain. So this is an earlier folding deformation, as you can see from that geometry up there. The plan shows interpreted BIFs at the St George Hill 60 Water Tank Hill deposits, associated magnetic high signatures. And off to the west and south, you can see that there are a couple of very similar mag highs that haven't been tested at depth, some shallow drilling, but no mag source. These are in a very prospective domain. They look similar to the dislocated BIFs elsewhere. Again, all the right hallmarks of deeper buried BIF systems. There are examples of high-grade shear veins in the Bugatti Dome, and Ramelius mined the Shannon deposit most recently, which is the most notable example. The Mirkwood Shear presents an opportunity for this style of mineralisation. Shear zone extends south of the Lone Pine Eridanus complex. It's defined over several hundred metres by anomalism. Section on the right there shows some supergene anomalism and some very sparsely defined primary zones which need more systematic drilling. Penny is one of Australia's highest grade gold mines with a mineral resource grade of 17.2 grams per tonne gold and an ore reserve grade of 15 grams per tonne gold. The figure on the right, plan figure, shows the location of the mine area in the southern portion of the tenement. Emanating northwards from the mine area is a key local structure called the Penny Shear Zone. There are a number of prospects, geochemical anomalies along that structure, and that structure remains our key target for future work. In long section, you can see that the Penny lodes are very discrete targets. Strike extent of around 200 metres and limited down plunge and dip extent. So they're small, hard to find, but high value, and we've got plenty of space along the corridor for more of these. Moving on to Ruzicka. So the Ruzicka project overlies highly prospective regional structural corridors with multi-million ounce endowment. The Laverton tectonic zone, the Keith Kilkenny tectonic zone, both key structures. We acquired Ruzicka early last year and added the big eastern package, the Kugela JV, later in the year. We've now completed over 30,000 metres of resource definition drilling at Ruzicka to improve confidence and advance the project. In the process, we've added 100,000 ounces to resource to take the inventory to 1.2 million ounces. We've also increased the indicated category of the resource by 185,000 ounces, taking that indicated portion to 1 million ounces. And we've identified multiple exploration targets in the mine camp and regional environment. Mine geology on the right, the Ruzicka deposit, 3 resource areas of Ruzicka up the north there is the largest resource, 890,000 ounces, 75% of the total endowment. Smaller Duchess and Duke resources sit to the south, and the advanced Cleo prospect sits just to the west of Ruzicka. The mineralised areas typically associated with granodiorite, They sit on in a fold structure that you can see on that geology plan. In detail, the ore bodies comprise multiple stacked lodes with high gold grades associated dip steeping, fold flexures, and discrete footwall load areas. We've outlined multiple targets in the near mine area based on our geological models. Typically, these are granodiorite occurrences in the outer fold stratigraphy. Two of the best targets shown there, the T4 target and the T7 target at Duchess. I won't spend too much time on those. The Indite package, 20 kilometres west of Rebecca. Two structural trends that we've identified for further work. Just in passing there, we do have some rare earths targets associated with alkali granitoids and quartzite. The plan view there shows a result of 40 metres at 0.54 total rare earth oxide, situated 2 kilometres to the north of a historic Syrian lanthanum prospect that hasn't been analysed for a full suite of rare earths. Lastly, very quickly, if I can, the Edna May region, Mount Finley JV, located 200 kilometres of northeast of Edna May. Strike extensive zone of anomalism along a granite greenstone contact. We've recorded several high-grade RC drill results. The section there is from a southern prospect called Tasman, 8 metres at 4.7, 13 metres at 4.37. But we're yet to understand the geology enough to show continuity. There are analogies of high-grade extensional veins in the region, so we're hopeful that this is one of those. I'll close it there. I think I'm short of time. Thank you.
Auroch Minerals Managing Director Robin Cox is an exploration geologist with over 12 years' experience in the management of greenfields and brownfields exploration. He's held various project and senior positions across a number of ASX-listed companies, and his passion for mineral exploration has resulted in multi-commodity experience, including nickel, lithium, gold, and uranium in various mineralization styles and models. Please welcome Robin Cox.
Good afternoon, all. On behalf of Auroch Minerals, I'd like to begin by acknowledging the traditional owners of the land on which we meet today, the Whadjuk people, and pay my respects to elders past and present. Today's presentation, titled Exploring for a Green Future, highlights the company's focus on delivering to the emerging global demand for battery minerals, and also giving a sneak peek into the company's current rebrand to Future Battery Minerals and a change of ASX ticker to FBM, which we'll be finalising shortly. General disclaimer, and for further details on today's presentation, they can be found in the listed announcements. Just a quick look at who we are and where we are. Auroch holds an enviable portfolio of both advanced and greenfield projects, with a strong focus on battery minerals aiming to meet the EV demand. These consist of high quality yet early stage lithium exploration projects, including the hard rock LCT pegmatites at Kangaroo Hills in Western Australia and the large scale lithium claystone targets in Nevada, US. Underpinning the company's battery mineral strategy is the existing advanced nickel assets, all located in Western Australia. Combined JORC 2012 resources include 25,000 tonnes contained nickel derived from the high-grade massive sulfide deposits of Saints and Nepean. You can see all projects reside in safe pro-mining jurisdictions where the company has successfully operated for some time now. Our corporate and technical team has maintained a lean and aggressive exploration strategy aimed at delivering answers and discoveries through intelligent, systematic exploration. Now, kicking off our project overview is the newly defined and exciting LCT pegmatites at the Kangaroo Hills Lithium Project. Firstly, I'd like to provide the context of where this project resides, which will help add weight to the significance of the exploration results. Situated in the lithium-endowed goldfields of Western Australia, precisely 17 kilometres south of Coolgardie, the project is flanked by major and emerging lithium projects, notably MinRes's Mount Marion operation, which is only 30 kilometres to the east. The project forms part of the Nepean Nickel group of tenements, which is a joint venture between Auroch Minerals and Lodestar Resources, in which Auroch is the 80% holder and is the operating partner. The project is well serviced with a sealed road leading directly to the site and is only 50 minutes drive from Kalgoorlie, where Auroch maintains a base of operation. Now, why we believe this is such an exciting project is we see the potential for this to be a transformative high-grade lithium discovery. I think underlining the optimism is how quick we have been to get on the ground and start the work on this project. So let me take you through a timeline of identification. Late 2022, exploration drilling intercepted a high-grade spodumene-bearing pegmatite consisting of 6 meters at 1.38% lithium oxide, including 2 meters at 3.2%. This made it clear to us that the pegmatites in this region of the project had fractionated to an LCT pegmatite, which highlighted a underexplored region of 3 kilometers within the northern part of the Nepean project. Following the drill hole intercept, we had our field team on the ground mapping and rock chip sampling. A number of outcropping pegmatites were identified, and in January, the geochem confirmed mineralization at surface with a peak assay of 2.37%, as shown in the lower right-hand photo. The geochemistry results helped define 3 high-priority drill targets, and by mid-January, we had a RC rig on the ground testing these targets. As stated, we were very quick to get the project drill ready, and we kicked that off with a 3,000 metre RC program manned by Australian Surface Exploration and their SRAM. The aim of the drilling was to test the mineralised pegmatites and test for strike extension of the original discovery hole. However, to keep it simple, this was very much designed as a first pass program. We have some high priority targets, but we are really trying to understand the presence and orientation of the pegmatite at this stage. At present, the program will wrap up later this week. Our field geologists and drillers have done an excellent job to date. All pegmatite intercepts are being sent for assay, and we're keenly awaiting the results. Following this program, really to kick off immediately is a target generative series of geophysical programs, starting with a detailed magnetic and structural interpretation. We'll also be trialing ground seismic and close-spaced resistivity surveys. This is all to carry on while we're waiting for that first round of assays. As you can see, there's a large amount of news flow coming regarding this project, and is something the Auroch team are very excited to be working on. Which is the perfect segue to our next exciting project, the Nevada Lithium Project. We acquired the project consisting of 4 lithium claystone prospects in mid-2022. They reside in the Tonopah mining district of Nevada in the US. Very different mineralization style to what we're chasing at Kangaroo Hills. These are lithium claystones, which means lithium bonded to tertiary age sediments. There is a schematic, as you can see to the lower side, that simplified mineralization model. But please feel free to come see me at the booth to chat about this in more detail. For those of you familiar with the US, will know that Nevada is very much a mining-friendly jurisdiction. The area has recently established itself as a lithium province, and our land package is surrounded by some large, very well-known lithium deposits, many of which are at very advanced stages. Notably, Ioneer's Rhyolite Ridge project, which is 50 kilometers to the southwest, and American Lithium's TLC deposit, which is 5 kilometers from our Western Flats prospect. This is largely what has drawn us to the area, and the land package has also presented anomalous lithium results from early stage soil sampling. As you can see from the location on the map, we're smack in the middle between Las Vegas and Reno, and the highway intersecting the project is the major freight route between the two cities. So along with the Tonopah Township being a historic silver mining town, we're well serviced for all of our exploration needs. Now, as I said, we acquired the project mid last year. We were very quickly to establish an in-country team consisting of a senior geologist, a landman, or as we know them, tenement managers, and a highly respected project advisor. As part of our first stage geological mapping and sampling program, we identified vacant prospective ground, which we moved quickly to stake. This was identified at the San Antone and East and Western Flats prospect. This increased Auroch's land holding by over 50%, so certainly no small achievement in that time frame. We moved quickly to plan drill holes and applied for drill permitting. Now, I'm proud to say we commenced drilling in mid-January, the very same week that we started drilling for the LCT pegmatite at Kangaroo Hills, something that couldn't have been achieved without the dedication and work ethic of our two field teams. The program will consist of 3,000 meters of RC, drilling up to 15 vertical holes planned at depths of 150 to 200 meters. This is very much a fast and cheap first pass program to specifically evaluate the stratigraphic potential of San Antone and Western Flats. I was there only 2 weeks ago, and while we are very excited about this first program, we also have an eye to testing the remaining prospects in the coming programs, and we are currently planning and permitting for that work. As you can see from the lower image, this time of year, it's impossible to take a bad photo, and also showing our all year round access to the project. Now, just briefly, what I'd like to highlight is the scale of domestic investment in the renewable industry in the US at present. And specifically, I can highlight the investment occurring in the lithium claystone space. Notably, the $700 million loan from the Department of Energy to ASX-listed Ioneer for their development of the Rhyolite Ridge project, and also significantly General Motors pumping $650 million into Lithium Americas for development and product from their Thacker Pass lithium project. So the commonality here is that these are both lithium claystone projects. So these shallow, high tonnage deposits are gaining significant interest and emerging as an important source of lithium for the batteries industry and the US supply chain ambitions. A critical component to our battery mineral focus is the company's mature nickel sulfide assets, all of which are located in Western Australia and surrounded by excellent infrastructure and mills with a need for high-grade nickel sulfides. The most advanced of these being the Saints Nickel project. The company is currently completing a scoping study into the economic potential of an underground mining operation located 70 kilometers north of Kalgoorlie, and we aim to be releasing a positive study in the coming weeks. As part of the scoping study, resource drilling has increased the confidence in the non-mineralization, with the majority of the resource in JORC 2012 indicated category. This currently sits at 911,000 tonnes at 2.3% nickel and 0.2% copper, which gives us a total metal content of 21,000 tonnes nickel and 1.6 thousand tonnes copper. As you can see, this is a genuine high-grade, massive sulfide komatiite nickel deposit, and I have a great piece of 9% nickel core sitting on our booth desk. Metallurgical test work has produced a saleable concentrate of nickel, grading at greater than 13%. We believe the project still contains strong exploration potential, particularly for resource extension at depth, which the company will look to evaluate. But we see the delivery of a positive scoping study will drive our next work programs as we look to advance the project to a potential operation. The Nepean project, another key piece to our nickel portfolio. The project contains a historic Nepean nickel mine, the second producing nickel mine in Western Australia. The project provides us with remnant mineralization, recently estimated and classified resources, plus 10 kilometers of underexplored potential. And importantly, the Kangaroo Hills Lithium project lies in the northern 3 kilometers of that tenement strike. Recently, we've completed further resource infill and upgraded the shallow and crown pillar mineralization into a JORC 2012 compliant resource, categorized with the majority indicated and remaining inferred. The company is conducting an internal scoping study with the aim of understanding the economic potential of a shallow open pit operation with a decline to access the remnant underground workings to mine and explore for further mineralization at depth. Just quickly, our Leinster nickel project provides some very exciting nickel sulfide opportunities. So exploration success that we've had is long strike from the Horn deposit. We intersected 72 meters of cloud sulfide texture grading at 0.46% nickel, and we believe this is a potential proxy for massive nickel sulfides within this project tenure. As stated at the beginning of the presentation, the company has a strong focus on battery minerals and their importance to the green energy transition. We have changed our name to Future Battery Minerals, but the reality is the demand for the critical battery minerals is present, and we have projects with the ability to deliver on this demand. A quick corporate overview. We have a lean team consisting of Executive Chairman Mike Edwards, Non-Exec Director Trevor Eaton, and myself as Technical Director, plus our respective field teams in Kalgoorlie and Nevada. We're looking to grow the team both at the corporate level and at the operations level. Current market cap is roughly 26 mil, 427 million shares on issue, and we have cash in the bank to fund our planned work programs. Why are we an attractive investment option? Our aggressive exploration programs, which commenced in January, will provide significant news flow in Q1, and we are very excited by the LCT pegmatites in Western Australia and the lithium claystone potential in Nevada. Our nickel sulfide projects provide a grounding to the 2 blue sky lithium projects, and we look forward to further advancing our nickel projects. We have a well-defined strategy and direction at the corporate level, and this is backed by our outstanding projects. Thank you for the opportunity to present today. Please visit our team at the booth if you have any questions. Thanks again.
Thank you, Robin. Damien Keys is the Managing Director of Sunshine Gold, a North Queensland-based focused explorer. He's a geologist by trade, having worked and studied in Queensland before moving to the West and being involved in exploration successes with Spectrum Metals, Black Cat Syndicate, and Silver Lake Resources. He returned to the land of the Mud Crabs, Barramundi, and Rugby League to start up Sunshine Gold. Damien, you know you're welcome to come back to the land of West Coast Eagles anytime. Please welcome Damien.
Thanks. Thank you for the warm welcome and the invite back. It's lovely to be back in WA RIU. Unfortunately, we couldn't get into the state last year due to the COVID lockdowns. Lovely to be back, going to update you on Sunshine Gold, gold and copper explorer in North Queensland. We've got 4 projects throughout Queensland, largely focused around the gold. Our most advanced projects are at the Triumph Gold Project, just near Gladstone. We've got ground adjacent to the Ravenswood Gold Mine, Queensland's largest gold mine, in the very prolific Ravenswood Charters Towers district. We've got ground in the Mount Isa Inlier and in the Hodgkinson, and we won't be touching too much on that today because the bulk of the work has focused on the other 2 projects. Very quick corporate snapshot, the take homes from this. 3 million cash in the bank at the moment, a market cap around 15 mil, and the directors have invested a significant amount of their own money into this company. Nice little snapshot on the snapshot of Titov, which is a copper moly porphyry target, and it's a fantastic outcrop, plenty of quartz and malachite at surface. So why Sunshine Gold? Well, we've got a large land holding in prolific districts, in underexplored districts. So Queensland's a place that exploration has been relatively limited in since the 90s. And we've got prospects that have been undrilled since the late 1960s. We've got exposure to multiple high value metals, gold, copper, molybdenum at the moment, silver, lead, zinc, and rare earths. We're an active explorer, so we've been busy on ground, beavering away since December 2020 when we listed. We've drilled over 30 kilometres, plenty of field time. We've got a technical team based in North Queensland. We live and breathe our projects. In that first 2 years, we've delivered an initial resource on the Triumph project. We'll be back down there drilling soon. It's a large-scale system, so although a modest initial resource, we expect that to grow rapidly. We've got an exploration upside around a suite of porphyry, copper, gold, moly, and silver targets at Ravenswood West, and we've delineated mineralisation at the Titov project over 500 metres of strike and 350 metres depth. We've got a suite of breccia hosted intrusion-related gold targets also at Ravenswood West, which are an attractive target, large bulk tonnage potential, and we've delineated, or we've drilled 2 holes at Wilbur's Hill, a greenfields breccia pipe target, and we're pretty excited about where we're heading with the next round of drilling. Apologies for the voice, that it's been a busy conference. The board is comprised of Alec Pismeris, Anthony Torreson, Paul Chapman and Les Davis, all present today. I suggest if you've got any questions, you bail up one of these 4 gentlemen at the booth and catch them before the day's out. We've got like I touched on, we've got a North Queensland based field team. We're based out of Townsville in North Queensland. The field team are all based up there. We can be out on the Ravenswood West project in an hour and a half from the office. It's well supported and headed up by Matt Price, who's also over here, my exploration manager, and he's more than happy to answer your technical questions. So 4 projects, Ravenswood West, we're focusing on large system targets. So we've got a pipeline of these breccia hosted intrusion related targets analogous to Mount Lation, 3.5 million ounce deposit, and Wilbur's Hill and Mount Wright, which is nearby, and that's 1 million ounce. It was 1 million ounce mine as well. We've got a 15 kilometre long corridor with 4 drill defined porphyry copper moly targets. And we've certainly in that mineralised district, 20 million ounces produced out of that district. Triumph is a large intrusion related system in its own right. And ironically, despite the distance, probably is the nearest looking thing to a Ravenswood gold mine outside of Ravenswood. Same hosts, big fracture controlled network. And we've been testing a zone in that intrusion called we're deeming the Southern Corridor. We've only tested 20% of that Southern Corridor for the initial 118,000 ounce resource. Investigator in the Mount Isa Inlier sits just south of the Capricorn copper mine. Recent drilling in 2022 was 23 metres at 3% on the Capricorn ground, which extends down to the south. And the Hodgkinson, we've been up there into some mapping work. It's highly prospective, just a bit further out of the way for us and a back seat at this point. So Ravenswood West, we've We've actually got 3 target styles, and we haven't really delved too deeply into the VMS style targets as yet, but we have got those breccia-related gold targets, the porphyries, and there is the VMS targets. So the district's produced 20 million ounces of gold. It's also produced about 12 million tonnes of VMS material. We've entered into a farming agreement to the southwest, down towards Pajingo. On that ground is a 50,000 ounce resource at a prospect called Plateau. And that also comes to surface. That deal is subject to completion, and it brings forward a project pipeline of advanced targets. The breccia gold, though, is the key focus at this stage. And why are they such an attractive target? Well, this is Mount Wright, sitting beside the map of the district. The blue dots on the map represent breccia targets. And Mount Wright, as you can see, was a sub-level cave system and consistently produced around the 130,000 ounces per annum. Sub-level cave, small footprint laterally, but very large vertical extent to these systems. Wilbur's Hill. So we've generated a greenfields target. We've been out, mapped rhyolites at surface and a nice volcanic complex. So the right age rocks. We were awarded some money from the government to do some geophysics. It lit up a nice chargeable anomaly. It extended for about 600 metres, and we've come back in and put 2 deep diamond holes straight into the system to have a look. Thankfully, we did intersect a nice looking breccia, and there's some of that on our booth that you can come and have a look at. The breccia, the deeper hole was rich in magnetite, elevated in vanadium and tungsten. The shallower hole started to see evidence for a cooling of the system and an elevated lead and zinc. So the intrusion related systems are big zoned, geochemically zoned systems. We're starting to move into more prospective, cooler assemblages. We've taken our biggest data set, which is our soil data set, and moved further to the north where we see elevated lead and zinc in the soils, still within that IP anomalism, and that'll form one of the next phase targets. And there's also some rock chip sampling in the area on fault zones, 14 grams per tonne, which we think is a pretty nice target as well for phase 2 testing. Plateau on the farming ground. So we've got a big breccia system on the margins of a rhyolite. Again, another nice rocket sitting at the booth that you can come and have a look at these breccia textures. But significantly, there's rock chip anomalism on gossinous material, both north and south of the pipe. That's not drill tested. Rock chips to 10.7 grams on the south side and 12 grams on the north side of the pipe. The porphyry targets sit just to the south of Wilbur's Hill, and we've got 4 porphyry targets that are being drill defined along 15-kilometre belt. Titov being the most advanced, Gagarin, Keynes and the Bank. So Titov and Gagarin were actually Russian cosmonauts, and it tells you about the last time these prospects were drilled, the late 60s. What we're seeing here is a porphyry system. We believe a eroded porphyry system, and the pink dots represent greater than 700 ppm copper in soil. So really elevated copper in soil. And the closer we get to the margin of the porphyry, the better those grades are looking. Significantly, the only areas on the margin of that porphyry that don't have soil anomalism is where we've got younger cover obscuring that contact. Titov, so we do have a bit of Titov core at the booth as well, and Titov has got a pretty impressive amount of molybdenum associated with this prospect. We've had our best intersection was 66 meters at 0.38% copper and 0.42% moly, which given the moly prices north of 90,000 US a tonne at the moment, makes it a pretty attractive proposition. You can go on ground here and crack bits of quartz and pull chunks of molybdenum out of that. We've done some preliminary metallurgy. We've drilled about 28 holes into this prospect to date, and we've defined it over a large strike length to depths of about 350 metres, and typically the system is about 80 metres in true thickness. So a snapshot of Ravenswood West, we're chasing high value metals and big systems. We've got those breccia targets with advanced targets at Plateau and Wilbur's Hill. We've got 14 other regional targets that we're working up in the background. The copper moly porphyries, we're seeing advanced targets at Titov and the Bank with plus 100 metre thick intercepts and big scale systems. We've got a more discrete system at Keynes and Gagarin that we'll be working up, and the VMS stuff that we haven't touched on as yet. A quick jump down to Triumph, where we've got a 118,000 ounce resource, and all we really want to touch on with this at the moment is that it's shallow resource. 85% of those ounces are at less than 100 metres depth. Acquisition and discovery cost to date is $24 an ounce, so we've done it quickly, cheaply, and there's a huge amount of upside down here. Positive metallurgy. The southern corridor, so there's a string of small prospects along the southern corridor, and you can see some of the drill intercepts. It is nuggety. It does pinch and swell, but there are some fantastic grades down in this neck of the woods, and we see huge upside potential to keep growing this resource. We have plenty of news flow coming. So we are up in Queensland. It is a bit wet at times, but we're back out drilling in March. The guys have been frantically running around with the mapping and sampling in the interim, and we look forward to keeping you updated on all the upcoming activities. So Sunshine Gold, in a nutshell, highly prospective projects, underexplored ground in proven jurisdictions, an experienced and successful management team, North Queensland based. That's a key thing. We're not up there working campaign. We live and breathe it. We're highly active. The guys are on the ground on a daily basis. 30 metres of drilling to date, delivering encouraging results. We're leveraged to multiple high value metals, and we're looking for big systems. If you've got any further questions, please come to the booth, and we'll be more than happy to answer your questions. Thanks a lot.
Damien, you are the master of the understatement. Queensland, a bit wet at times. The place has been underwater for months now, the whole state. Now, do we have Lynn Anderson in the room? Not you, Ashok. Because if Lynn Anderson is here, she has won the Como Engineers Pure Gold Gin. And if she's not here, then unfortunately, I have to take it. I'm sure we'll find her. Lynn Anderson of Legend Mining. The correct number of gold beads was 8,104. And Como Engineers provided the Pure Gold Gin. And I believe it's an absolutely gorgeous gin as well. So thank you for that. Blackstone Minerals Managing Director is Scott Williamson. Blackstone is a Western Australian-based mining company exploring Southeast Asia's premier nickel sulfide district. Scott joins us now with the full story about Blackstone. Please make him welcome.
Thanks, Jerry. Thanks to everyone for attending the Explorers Conference. Great to be back in Freo again. I'm going to mix it up a little bit. I'm not going to talk about any drill holes today because although we love our exploration at Blackstone, we've done over 100,000 metres of drilling in northern Vietnam. We're actually focused on our development project, which is to produce a mine which is previously operating. We want to restart a mine but also build a downstream nickel refinery to build and process nickel concentrate to produce the downstream products for the lithium-ion battery industry. So you can see there, that's a previously operating mine, operated between 2013 and 2016. And it went into care and maintenance when the nickel price was around $8,000 per tonne. And today's prices, obviously, this is a mine that will print cash. So I think the key difference between us and most of our peers in the industry that we are building a vertically integrated business, and it won't just be mining, we'll also be refining and producing these chemical products that are required for the lithium-ion battery. We're using abundant hydroelectric power in northern Vietnam region, and we just happen to have a globally significant nickel sulfide resource and reserve there as well. The cost structure in Vietnam means that we'll have a first quartile cost position. So we're in the lowest quartile for nickel sulfate developers and producers. And we're going to do this with partners. And we've spent a lot of time in, particularly in South Korea, where the major players in the battery industry we are. And so the major players in the lithium-ion battery industry are South Korea, Japan, and China. And so we're working on a partnership model where we will bring those partners into this project. We'll share the capital requirement, but they'll also bring some of the technology required to produce these chemical products for the batteries. And we just happen to be, with some great tailwinds, current nickel prices, and you can see, there's a strong demand for a high nickel cathode, and that's really driven by this range anxiety. Obviously, it's all about getting long range in your electric vehicle, and to do that, you need plenty of nickel. Just a quick snapshot. So we have cash of around $18 million. We also have an R&D rebate coming in around $4 million. So that doesn't include that R&D rebate. We have listed investments of over $10 million. So we have some other developers that we've invested in. We're keen to get some of their concentrate potentially coming into Vietnam. So we've had some strategic investments there. Very supportive shareholder base. We've got Fidelity, which is a great supportive shareholder, Deutsche Balaton, the guys at Nanja out of Hong Kong, board and management with a strong position as well. So you can see the board and management recently added Dan Locker. So great to have what I call the king of nickel on our board. Dan's done everything in the nickel space. So really happy to have him on board as another mining engineer on the board. Good analyst coverage and plenty of support from the sell side as well. So you can see here we're in the northern Vietnam region, up near Hanoi. Beautiful country, beautiful people, so loyal and so hardworking. We're just west of Hanoi. That's where we'll build the refinery and we'll restart the mine. So you can see there the DFS is underway. So in that what I call the orphan phase, where everyone goes and hunts something else or goes looking for drill holes, we're in that phase where the institutions come hunting for us, and that's why we're unfortunately the retail investors have I suppose gone somewhere else, but what we can say is that the institutions are very focused on what we're trying to achieve here, and that's to build a upstream and downstream. So to do that, we've completed a significant piloting phase with 12 months of piloting at the ALS laboratories on this downstream processing, where we produce the NCM 811 product, and we'll talk more about that. So you can see you've got the mine, low strip ratio, large open pit mine, around 0.4% nickel, which is very similar to the Mount Keith nickel mine, which has been a great asset for BHP and WMC over many years. So then we take it from the mine and we convert it into these chemical products in the refining process. You can see this is the structure. This is where we're looking to bring in the partners in that refining process to produce the NCM 811 product. So nickel, cobalt, manganese is the is the preferred chemistry mix of the lithium-ion battery for those long-range vehicles, and at a ratio of 8:1:1. So 80% of that cathode will be nickel. And that's where we're bringing the partners in. The partners will bring that technology that allows us to produce those downstream products. We'll also have third-party concentrate providers, and we have a close relationship with Trafigura, and they'll bring in up to 50% of our feed will come from areas like Australia and Canada, South America or Africa, and we'll bring them into Vietnam and upgrade them into these downstream chemical products, which trade at a significant premium to the LME nickel price. So the NCM 811 price has traded between 20 and 40% premium to LME nickel. So it's an in-demand product which trades at a significant premium to metal. And we'll also do this with some of the lowest carbon footprint in the industry. So we have a focus on hopefully becoming net zero from day one. And the way we can do that is we've got abundant renewable power, a vertically integrated supply chain. So we're minimizing the transportation of intermediate products. We're using a sulfide nickel where we're combining that with electric mining equipment, and we've put that in our study. So we've been very focused on electric mining fleet in our study work. So we're replacing fossil fuels. The pressure oxidation process, this is a hydromet technology, which is much lower carbon footprint, much lower energy intensity than the conventional process, which is pyromet, which is used in the stainless steel industry. So with all of that combined, we think that we can move towards a net zero outcome from day one. And a lot of people say, well, what's it like operating in Vietnam? And I can say that I've operated all through Africa, and this is much different to that. We have some of the lowest costs I've seen anywhere in the industry. We can get so much more done for our dollars. And you can see there the labour costs are actually half to a third of the cost of operating in China. And that's why a lot of large manufacturing companies, particularly out of South Korea and Japan, are pulling their factories out of China and they're putting them in Vietnam, because it is one of the biggest growth stories in the world at the moment is what's happening in Vietnam. And so it's driven by that low operating cost environment, the access to abundant renewable power. It's a great place to operate, and we just happen to be lucky that there's 500,000 tons of nickel there as well. So you can see here, this is the cost curve. This data we gathered from our friends at Trafigura. So you can see very clearly we will sit in the first quartile. These are nickel sulfate producers or developers. So you can see these are the nickel products that go all the way through to nickel sulfate. You can see we will be in the first quartile. Very strong operating cost profile particularly compared to our Indonesian peers. So Indonesia is our biggest competitor, and you can see most of those projects are to the right of the chart, and we're sitting well and truly to the left of those large Indonesian nickel laterite projects. You can see here we've done recently completed a life cycle analysis. We've used a group called Mincor. They are the world leaders in life cycle analysis of greenhouse gas emissions and carbon footprint. They've also worked closely with Tesla. So you can see here that study has also been independently verified by the Nickel Institute. So we will sit with one of the lowest carbon footprint green nickel products in the industry. And you can see there, we also want to go further. We want to go to net zero and beyond. So we have a pathway to net zero, and that'll be a big focus of ours in the final study work, but also as we build the mine and the refinery over the coming years. So you can see Indonesian nickel, which is abundant, unfortunately has a carbon footprint that is just not acceptable particularly for those premium brand electric vehicle manufacturers in Europe and the US. This is our resource. So you can see we've got a nickel sulfide district. We've got a number of targets. We've tested probably half of those targets. We're now focused more on the development side, but we've got 485,000 tonnes of nickel in resource. And that's driven by one large open pit, the Banfork open pit, which has 452,000 tonnes in it. So it's a big open pit. You can see on the next slide, I think, maybe, there it is. So it's a big bulk tonnage open pit, low strip ratio, 2.9 to 1. It'll do about 18,000 tonnes per annum of nickel for a 10-year mine. So that's our flagship asset. That'll be the main feed into our refinery. And then we'll combine that with third-party feed from around the world. So this is the chemical set. We've got a team of experts, of chemical engineers, and we're working very closely with the team at Wood. We see them as the world leaders in hydromet. This is a pressure oxidation process. It's tried and tested technology used all through the industry since the 1960s. The other main process we use there is solvent extraction. Everyone should have heard of that. That's a technology that's also well known and used all throughout the base metals industry, and also so these technologies, nothing new, nothing novel here. This is straight off the shelf technology. The key here is that last step, which is the NCM, and that's where we will bring in some expertise from areas like South Korea. So until we get to the nickel sulfate, this is all modern mining industry technology that's well tried and tested. One of the benefits of having a hydromet as opposed to a pyromet is not just that efficiency and the ability to produce a cleaner product. It also allows us to bring in different feedstock types. So we don't just have to bring in nickel concentrate. We can look at MHP, which is a mixed hydroxide precipitate, nickel matte, and also black mass, which is the recycled product from the lithium-ion battery. So it's a very flexible flow sheet, allows us to bring in different concentrates that potentially might not be suitable for the stainless steel industry. So something that might have high arsenic or high MgO, or talc. These are not issues for a refinery like this. The hydromet pressure oxidation process is much better suited for these chemical products for the lithium-ion battery. But most importantly, we have this flexibility to arbitrage the market, because at times MHP might have a higher payability than concentrate. And so you can change your feedstock mix depending on what the market is the dynamics in the market. So mixed MHP, for instance, has traded as high as 90%. At the moment, it's much lower. So at the moment, we would be looking potentially to bring in MHP. So we have that flexibility to bring in these different products, and we work closely with our partners and the trading partners, groups like Trafigura, to get that chemical process mix just right. All right. Oh, and on that, so we've just completed that piloting. The pilot plant phase came in better than we had hoped. So recoveries much better, so greater than 97%. So yeah, some very strong recoveries in that pressure oxidation process. In our study work, we assumed 96%. So really happy to get those good recoveries. You can see we ran the process for over 1,800 hours. So it took 12 months, but this is a body of knowledge that we can now take to the next stage of studies. We can take those products. So we've produced battery grade nickel sulfate, battery grade cobalt sulfate. We can now ship those products to our partners and get confirmation that we are producing those battery grades, and they can do the test work that allows us to move into the next stage of offtake and partnership negotiations. You can see also some strong work done at the concentrator level. Also, we have at the concentrator where we've restarted the existing concentrator. We have a pilot plant on site. So some great work on the concentrator piloting as well. So as in summary, we've completed the pre-feasibility study. We're now in that definitive feasibility study phase. We're looking to complete that over the next 6 months. We've completed piloting, but really what's going to get the re-rate is we bring in the large partners, show that this will be built, move into the build phase, final investment decision, And that's where we're going to make the investors rich, is basically just keep an eye on the announcements with respect to partnerships, because as soon as those partnerships are locked in, we're going to build it, and the share price will run. So thank you for your time.
Thank you, Scott. Brightstar Resources is currently merging with King West Resources to form the next ASX-listed WA gold developer, with the combined JORC resource approaching 1 million ounces and a processing plant on care and maintenance. Brightstar is ready to shine as it advances through drilling and studies towards production. Managing Director Alex Rovira is here to discuss the merger and exploration programs currently underway at Laverton Gold Project. Please welcome Alex.
Thanks, Jerry, and thanks, RIU, for allowing us to present. I believe this is the first time that Brightstar has actually presented at the vertical event, so looking forward to delivering it. And it's also my first presentation, so it's pretty tough to go after Scotty Williamson, who's probably the best dressed bloke in the mining industry in a suit and tie, but he is short. So, Brightstar. We are located in the Laverton tectonic zone, so we have 300 square kilometres north and south of Laverton. It is an excellent geological terrain. Over 20 million ounces have been mined through there. Some fantastic ore bodies like Sunrise and Granny Smith, Mount Morgans as well. We do have an existing resource of 460,000 ounces at 1.6 grams per tonne. Significant exploration upside exists there, and I'll run you through that shortly. There is circa 80,000 ounces of historic production from the Brightstar tenure. As Jerry mentioned and was released to the market in late December, we're currently in a merger process with King West Resources via a scheme of arrangement. King West owns the Menzies Gold Project, funnily enough in Menzies. They've got circa 500,000 ounces in resources as well. And I suppose the strategic rationale here is you're taking two businesses that have circa 500,000 ounces each and a plant on care and maintenance, and really just rapidly assessing production restart opportunities and really unlocking the inherent value that was in the ground for both of these companies. For us, it does deliver that critical mass. There is exploration upside in both projects, so we think we can grow that resource through 1 million ounces and further. We have kicked off exploration. We've got a 6,000 metre RC program that's underway at the moment at Corktree Well in Laverton, just north of Laverton, and I believe King West is also kicking off an RC program down at Menzies. We have got mining studies underway. We're anticipating a scoping study for release in the middle of the year, and that'll flow straight through into a pre-feasibility study as we assess turning the plant back on. So just a quick corporate overview. So circa 15 to 17 mil market cap based on the current price for Brightstar. We've got circa $2 million in the bank, so a kind of a $15 to $17 million enterprise value. Pro forma, post-merger with King West, we're about a $30 million market cap based on today's pricing, with circa pro forma $4 million of cash in the bank. So for a circa $26 million EV, for 1 million ounces in a processing plant, we think that's pretty good value to unlock what we're doing and try and increase. Just touching on the board of management, I joined as managing director about a month ago, 10 years of corporate finance and banking experience and geology by background. Josh Hunt, non-exec chairman, lawyer, and Tony Lau is a finance professional. I suppose the merger with King West does deliver lots of mining nous and experience. Dean Valve was just appointed as chief operating officer at King West. He's a geologist and a mining engineer by background, done feasibility studies, done operations. He's a great pair of hands to have in the business as we go through this process. John O'Downs, non-exec director at KWR, is also the managing director of Kaiser Reefs. They've got an operating gold mine in Victoria. So it's certainly going to have enough mining experience to get through the feasibility studies and into production. Just touching on where we are in the world. So as I mentioned, in and around the Laverton district, this is a very dynamic kind of jurisdiction we're looking at the moment. Obviously, we've got our plant there in care and maintenance south of Laverton, but you look in the district, Dacian's just put Mount Morgans onto care and maintenance. That's 3 million tonnes per annum taken out of the region, assuming Hoover House completes and Gwalia is full with Ulysses from Genesis. Then likewise, Gwalia kind of comes off the market for taking third-party ore and potentially toll treating. So when you look at the district, you've essentially lost Mount Morgans, you've lost Gwalia. Very difficult to deal with Granny Smith and Sunrise. So when I look at this district, there really is no processing capacity in that Leonora Laverton district that can be taking third-party ore. So for the likes of King West with the Menzies project, look, this unlocks a lot of that value for us and for them. So that resource otherwise would be in the ground, but we think that can truck to our processing plant, and I'll talk you through that shortly. As I mentioned, we're all the assets, all the resources, on granted mining leases. We're in the right part of the world, surrounded by some pretty substantial mines. Just quickly touching on the transaction overview. So it is a merger by a scheme of arrangement. The current timetable sees that completing in April. It was ostensibly a merger of equals, but Brightstar will end up at 57%, and King West 43%. And as I said, the strategic rationale there was really consolidate in this the WA goldfields, take two underloved and unappreciated assets that do have upside and put them together and really just fast track that processing, that development process. Just touching on that, the regional overview, as I mentioned, it's an interesting jurisdiction. So Menzies just down here with King West. Going north, you've obviously got Genesis here and merging with St Barbara to form Hoover House. Going east, you've got Kin across to Dacian, which is also in that transaction with a separate transaction with Dacian. So with Genesis, and then across to our 10-year around Laverton. So it's a pretty dynamic district where we are. Look, we think we can build something pretty quickly, given we've already got the existing infrastructure. We do have critical mass. We're just looking to quickly go through feasibility studies and add some ounces. So for us, it's a dual strategy. The production restart is really just drill outs, a bit of exploration and taking it through feasibility studies, and that'll underpin a low capex restart. We also are looking at some regional expansion opportunities, just given the district as it is and how the fragmented nature of the ownership, both public and private companies. We think there's an opportunity to potentially assess some M&A options as well, which could be quite interesting in terms of fast tracking the resource size. Just doing a quick zoom in on the Brightstar overview. So as I mentioned, we're at circa 300 square kilometres for 460,000 ounces on current granted mining leases. The bulk of the resources sit at Corktree Well, which is just north of Laverton here. That is 250,000 ounces in was likely to be a single pit with significant exploration upside. So we are drilling 6,000 metres there now, and looking forward to kind of seeing what that throws up. South of Laverton is where the processing plant and two other deposits called Alpha and Beta are located. Look, we are in a pretty unique part of the world. That's Linus's Mount Weld rare earths mine, circa 5 to 10 k's away from our plant. You can see it from the ROM pad. So yeah, we're in a really interesting jurisdiction. All the resources are open along strike, and at depth. Brightstar was previously known as Stone Resources, does have a storied history. Essentially, there was a nearly 10-year period where the previous owners of the company didn't actually drill a drill hole. So for me, this is something that we're coming into. There's significant value to unlock because essentially the previous management over a period of time just didn't add any value with the drill bit, and we think that's pretty exciting. So this is the drill program we've kicked off at Corktree Well, 6,000 metres, 30 holes. You can kind of see where the resource shapes exist now. That's the current 250,000 ounces in resources. The red triangles there on the east are all the drill collars, planned drill collars. I suppose for me, what excites me here is the drill hole we released late last year, 6 metres at 3 grams. Doesn't sound exciting in and of itself, but where it was located was in this kind of point right here. It essentially hit that ore 100 metres vertically below the mineralised envelope in the current resource and 150 metres along strike. So for me, that tells you that mineralised structure does continue to the north. Essentially, it is completely untested because it sits underneath this waste dump. So that's been there since this was mined in the 80s. So essentially 40 years that waste dump's been sitting there and there's been no drill holes through it. So you'll note most of the drill holes are actually located on top of the waste dump. So the drillers are pretty stoked, but we've had to drill through that and test this. And that is essentially from here where that drill hole hit up to this section here is 450 metres of strike that hasn't had a drill hole. So if this mineralised structure continues, that's substantial scope to increase this resource. We'd like to think this 250,000 ounces now will be significantly higher than that. And essentially at this kind of grade, the high 1s gram per tonne, this will be the base load feed for operations moving forward. This is the processing plant that we do have on care and maintenance just south of Laverton. That top photo is taken from Como Engineering. They did a report about 18 months ago in a refurb and restart study. They priced it at $5.5 million to turn it back on and take it to 650,000 tonnes per annum. If you backsolve what a head grade going through that might mean, essentially it'd be a 30 to 40,000 ounce gold producer. And as a business, I think that's your subscale and certainly not what we're trying to do here. So we've appointed GR Engineering and they're currently doing a refurb study on the plant at the moment and really reassessing how big can we make the plant, what's the appropriate size, is it 1 million tonnes, is it up to 1.5? I think if you take it to a 1.5 million tonne per annum plant, you'd be north of a 100,000 ounce gold producer. So I think that's where you need to be as a business, and we've certainly got the resource and exploration upside to underpin that. That bottom photo was taken by me a couple of weeks ago. You can kind of see the crushing circuit in the foreground and, you know, bore mills and things like that. So we do have a lot of non-processing infrastructure that's got significant value. We've got to operate, 60-person camp that's sitting there. We've got airstrip vehicles and things like that. So whilst a lot of companies might say they've got a lot of value in the infrastructure, this is tangible and real. This is money we don't have to spend. We've got a tailings dam there that's probably would cost $5 to $10 million to build a brand new one. So for us, this is tangible, it's demonstrable, it's going to add a lot of value. It's something that we don't have to pay for. Yes, we have to pay to refurb it. Yes, we have to pay if we want to expand it. But when you look at the greenfields developers on the, there's some great companies presenting in the last few days, they need circa $150 to $200 million to get into production. That is not what we're assessing here. We could rapidly get this back into production. This is just some work we did on the capital costs for processing plants. I'll draw you to this column first. The builder who built most of the recent gold plants, look, it's geoengineering, so it's no surprise why we're using GRES. We think that makes a lot of sense. You'll note that the first couple rows, that kind of 1 to 1.5 million tonne per annum plant, the one we're assessing a building, the average cost for the plant alone is in that kind of $70 to $80 million range. So if we can build something that takes it to that size for a fraction of that cost, I think that underpins the inherent value that we have in this business. This is kind of just touching on just a graphical representation of it. I suppose the key to note is that that is just for the plant alone. So I think, Galileo Resources, I think their processing plant was circa $75 million. I think their all-in capex was circa 200. So that tells you that non-processing infrastructure is a significant part of the capital component. As I said, we've got accommodation camps, we've got a TSF, we've got an airstrip, and we've got access and haul roads right to between the plant and all the operation, the historical pits. So that's a significant amount of capital that we don't have to spend. Just quickly diving into King West. So as I mentioned, this is a business that we're merging with at the moment via a scheme. The Menzies Gold Project is historically a very high grade gold project, mined 800,000 ounces at just shy of 20 grams. When you look at what the resource is there, 505,000 ounces at 1.3 to 1.4, I think that is not really a reflection of what Menzies is as a system. The King West released a resource late last year in December, a subset of that essentially showed there was 45,000 ounces at 5 grams in a single pit. So what King West are doing at the moment and what we would do post a successful merger is really focus on the grade and the margin opportunities in here and really see what would truck to Menzies. Sorry, to Laverton. And I suppose when you touch on the haulage costs, look, it's not a short road. It's 250 Ks that we're going to have to haul it. The current quotes we're getting in kind of market rates, let's call it 15 cents per tonne per kilometre. That's a circa $40 haul, $40 per tonne. In gold parlance, that's half a gram. So if it's going to cost us half a gram to get it from Menzies to our mill, then we know if we're digging up 3, 4, 5 gram dirt, then that's got really significant value for us. And if we're blending that with high 1 gram dirt out of Laverton as a baseload feed, then we're a substantial producer. And I suppose for me, when I look at what's happened in the industry recently, you look at you have to go look at the last couple of quarterlies for Red and Calidus and what's happened with Gascoyne and Dalgaranga, even Mount Morgans with Dacian. These are ore bodies that were largely 1 gram ore bodies. And when your one pit's not performing or you're reconciling at 0.8, that 0.2 of a gram might not sound like much, but that's 20% of your gold and that's your entire margin. So what we're trying to do here is utilise the grade out of Menzies with the baseload feed out of Laverton and really deliver something that's got optionality. I suppose that's another key thing for Menzies is spread over about a 15 kilometre strike length down here. As part of that 500,000 ounce resource, that's across 12 pits and potential underground. So we do have optionality and we do have grade. And they're two things I think a lot of our peers in this space probably don't have. Look, Menzies, significant exploration upside. This is some of the grade, like I call it some of the hits, 5 metres at 8, 2 at 9, 5 at 10, that kind of stuff, all shallow. So for us as a business, the high grade domains at Menzies are going to be the cream, I suppose, from a production scenario. I've touched on the regional consolidation and what's happening, but yeah, I'll just quickly go back over it. But as you can see, there's a lot of net capacity coming out of the district. And for us, when you take out Mount Morgans, if you take out Gwalia, there are a lot of smaller players, I suppose, from all the way from prospectors to some unlisted companies, some non-core assets in public companies. There's a lot of, call them stranded ounces in this district that if you're taking out various processing solutions, then the ability to build a 1.5 million tonne per annum plant south of Laverton actually becomes really attractive. It makes us more attractive, I suppose, as an acquirer for other potential bolt-ons, but also as a target as we build this business. This lastly is kind of everyone throws it up. This is our peer comps and where we're sitting. We're trading at circa $30 an ounce in the ground. I'd like to think that's significantly undervalued. We are on mining leases. Half of those ounces are in measured and indicated category. We're in WA. Like you'd like to think, we could trade a bit higher than that, notwithstanding, the significant tangible value of the processing plant. I suppose the key when you look at here, apart from Black Cat, which, looking at Coyote and Paulson's as a restart, all these other operations are greenfields developments. Some of them are fantastic projects in their own right, but they will need $150 to $200 million to build it and get in production. And that capital hurdle is significant, certainly at the moment in the current market context. For me, when I look at this, could we build a business for a fraction of that? And absolutely we can, purely based on the fact of where we are and the infrastructure that we do have. So we're fortuitous. And this is the summary slide. I think it makes a lot of sense of why we're doing what we're doing. We are focused on WA. It's the green. We're in a great jurisdiction. Everyone knows, everyone gets it. WA. We are substantial. We've got 1 million ounces near on in resource, but significant exploration upside. So I like to think that number will get bigger and bigger as we get the drill bit into the ground and also some potential M&A opportunities. And that's it. I'll leave it there. Thanks a lot, Jerry.
Alex. Thank you, Alex. That takes us to lunch once again. If Lynn Anderson is in the room, didn't she write a song?
Hi, my name is Brad Gurry and I'm the CEO of Social Suite. Social Suite's an environmental, social and corporate governance reporting platform, ESG. We're proud to be supporters of the RIU conference, and I'd firstly like to start by congratulating Social Suite customers that are here presenting throughout the duration of the conference. Black Canyon, Coda Minerals, Galileo Lithium, Galileo Mining, Helix Resources, International Graphite and Nordic Nickel. These companies, along with 80 ASX micro to small caps, understand the importance of ESG to create long-term organisational value. The Social Suite platform is specifically designed for micro to small caps in supporting them, one, to attract capital from investors that value ESG disclosures, two, creating revenue through responding to supply chain requests and the negotiation of offtake agreements. 3, mitigating organisational risk while building brand value. The Social Suite platform is easy and affordable for the smallest of organisations to get started with ESG. This is complemented by our industry expert ESG coaches who will help you with your ESG journey. We wish all companies and investors a successful RIU conference, and we're here to help with your ESG needs.